Hi, welcome back. So this is my third video on trading 212. I was gonna wait a little while longer for my new update, but since there's been an incredibly crazy time, so as you know, COVID-19, which is now coronavirus, has been wreaking havoc. So people's portfolios have been going down. Mine has shot completely down. I think on my previous video it's about £150 I think it was in minus, and before that, just a couple of days before, it was like the opposite, 170-ish in the green. So at the worst it got to about £500 in losses. So highly volatile, be very careful. So getting to this, one of the things you kind of should note, generally in times like this, people usually buy gold because it's more stable. Something that's been surprising is gold prices have been actually falling, which is very unusual. They usually, when the economy is not doing too good, the price of gold usually goes up. So people have been kind of figuring out why this is the case. Where's my gold company? Too many. No, sentiment, sorry. I should be buying more stock in sentiment. One of the reasons why people think this hasn't been increasing as much as it should is a lot of investors are being quite in panic. So they're selling their positions in gold to cover losses in other areas. It might also be because maybe they're selling their gold so they can buy into the stock market more in other areas. So we don't really know yet. I'm presuming it's to kind of save on losses that they're losing elsewhere. So usually gold goes in the opposite direction of equity, so this is quite unusual. So at the moment we've entered a market correction, so there's been that means like the 10% market drop, not quite as much as a bearish market, which is like 20%. They expect this is going to be about 4 to 5 months, so this means that the market's going to restabilize at lower costs, which is it's quite a healthy part of a modern economy. This generally happens. Usually, like, the stock market has been steadily increasing, going up. So it's quite healthy for it to have a short stabilization time, which it has been doing. You can take advantage of this if you're paying into safe companies by buying stocks that are at their lowest. So for example, AMD, this was one of my biggest gainers. I was at quite a lot of profit with them, as you can see. So I have 11 shares with AMD, and they've been devastated by the financial with their supply chains in China. So they have a heavy reliance on lots of their parts coming from China. But I do see this rebounding, so for me this is definitely a buy if I can, but I think I've bought into it a bit too much already. I can see it possibly getting worse. So COVID-19, they expect that the market's not going to recover until they think they might possibly solve it by April, which is still quite a while away, and I think the market might drop some more. So I'm considering getting into AMD a bit later. I might wait a while longer. AbbVie, I'm trying to get this at a lower point, but this company, it's one of the few dividend growth companies. So they've been growing year on year. So over 5 years, they've been growing 18.5%. So they have a dividend yield of 5.3, and their earnings absolutely cover their dividend payouts. So this is a great company. I do want to get into them more. Let's see. Keep in mind, if you are buying into the market, this is not financial advice. I should say, make sure you have an emergency fund to kind of get you by if something happens. So about 3 to 4 months of finance to kind of cover the costs of what you need. So let's see. I got into Adobe because, as I can see, like the market is moving away from physical goods. It's moving towards more digital, so more AI, more software, more things that people don't physically need to touch as much. So Adobe is kind of following that trend. Let's see. I bought some more shares in AGNC, so this is now one of my top earning REITs. So this pays a monthly dividend, and I think it's about 10%-ish. And I can see this increasing. They're doing very well, but they've been hit at the moment. So Apple, as a technology company, they've also been relying a lot on parts from China. They're trying to move away at the moment, but I can see when things recover, they have a backlog of orders they need to fulfill. They're probably going to try and cover that later, so I can definitely see this rebounding. AT&T, they've been destroyed. I bought a couple more shares in them. A great REIT, so they pay quite well. Oh, sorry, not a REIT. They're just a regular dividend payer. Barrett, I'd like them to drop a bit more. Ideally, if it can get to around here, if it's possible. I think next week you should see some further drops, but you never know with the market, so kind of let's see. Yeah, British Land, they went down quite a lot, and it's another REIT. I can see them dropping more, so market's definitely being shaken up. So this company, Broadcom, they do have a reliance on parts from China themselves, but they're actually a high dividend growth company. So the last 5 years, they've been growing by 51%, and currently have a yield of 4.6. So they're a semiconductor and software company. And I think they tried to buy Qualcomm about 3 years ago. It didn't quite go through, but they're continuing to do quite well. Let's see. Carnival. So this is a great dividend stock, but don't expect much traveling at the moment. So this is they do cruises, holidays, vacation. So this has been devastated by the coronavirus at the moment. Let's see. Coca-Cola, I definitely like to buy more of them. There's one company called Gilead Sciences, so they've been at the front line. They think they might be able to find a cure to corona first. So they're at phase 3 clinical studies of their remdesivir medication. I probably said that wrong. So there's a good chance they might be able to find a cure first. So that's going to help their stock just jump if it happens. So who knows? Let's see. Definitely Hormel Foods. It's quite expensive, so I've been buying this very slowly, but I can see this continually increasing. So this will happen once the COVID-19's finished, which who knows when, maybe April. So going back to, what is it, Carnival? So in total, they've crashed about 30%. So that's definitely harming their outlook for 2021 also. But I think they have a 6.3% dividend yield, which is quite good. But things will return, so this company I can see rebounding. They'll do quite well. Let's see. Cloudflare, as I mentioned. So things are moving towards more digital, less physical. So people are looking into more security, like this company, software security through the internet. They've been growing, which is surprising. One of the few of my stock that have increased. Costco, great company. I have 0.21 shares, like to increase. And GlaxoSmith, solid company. They've had a decrease at the moment, so I'm at minus 6.68 pound. Highland Gold, similar situation as Sentiment. So people have been selling off their gold as to cover the costs. And iShares S&P 500, great company. I'm sorry, great. So this is a great S&P, covers 500 companies. This will return. It's only going to take a while. So as soon as COVID-19 is sorted, I can see this rebound more. Let's see. Government bonds. Oh, this one. This pays monthly. I'd like to increase my shares here. So, as you know, when the economy does bad, bonds generally increase. Lloyd's. It hasn't been going great at the moment, but they do have potential in the future. So I am going to continuously add some more funds into this. I can see them continuing to rise, but at the moment, I don't see anything changing until Corona's sorted. So I'm at 11% loss, so £12.58. Oh, MasterCard. So this has had grown over 20% over the last 5 years. I think at 20.1%, and they have a dividend yield of 0.5%, and their earnings definitely cover their payouts, so this is a great company to have. PayPal, solid, 0.8 shares. Same with Pepsi. In some ways this is better than Coca-Cola. They're more diversified as a company, so if one thing fails, they're pretty good. Hasn't been losing as much as other companies I have. Realty Income, this is one of the top REITs, but at the moment it's not doing great because of COVID-19. Sony, so they do have software and hardware, but I'd say more hardware company. So they have been devastated by coronavirus. I can see this as like a sleeping giant. Sony will rebound quite slowly, but I can see that happening. So I might buy some more shares of Sony. Starbucks. So this stock has dropped over 14% in the past month. So I think they've had loads of closures in China. So it's closed most of their stores at the moment, but I can see that it's not the same as technology companies. People have back orders, they still need those. When you buy one coffee, it's not going to be different when things restore back to normal. People aren't going to buy 2 coffees to make up for ones they lost the previous day. But it's a pretty safe company. It's something that people always want, and it's always in demand. It's going to swing back, and they did mention they're going to return to China when things get a bit safer. Let's see. Tesla. So I did not want to get into this company originally, but they were doing amazing. So they've had some huge increases. I think at their peak was like 918 US dollars. And I regret not getting to them earlier. So if there's a company you'd get into at this price when it's not there, you might as well wait until it gets there. I can see them dropping more. They also have supply issues at the moment, and I think in April they're supposed to have a new battery technology they're going to introduce, which might make the stock jump up. So I'm probably going to invest more into them. And Virgin Galactic, one of the few also in the positive, but this company has been rising faster than Tesla. I might get into them more. And what is it? Texas Instruments. This is also a very good dividend company. They've had over 20% growth over 5 years, currently at 3.04% dividend yield. So they're trading at 22 times earnings. So I think it's 5.19 US dollars, covers the payout of 3.9. Great company, continuously increasing, except as you can see, they've been devastated by Corona, semiconductors, and let's see, Disney. They've had lots of closures, so this is probably a great time to get into Disney. They're at a discounted price. They had closures in China with Disneyland, and things are slowing down with the market there. People less likely to go outside, but this will rebound. So currently I have 1.4 shares, minus £22.91. Okay, so this is the latest update on my portfolio. I have, if you're interested in getting into investing, keep in mind this is not financial advice. Please do your own research. And so this is no shares, no gains. Use my referral link in the description. I have for Trading 212 and Freetrade. So if you have any questions or suggestions on improvements, I'm happy to hear. Kind of let me know what you think, and hopefully this keeps improving. And okay, please join the crew. See you again. Bye.